New year, new outlook. As 2023 draws to a close, investors are looking forward to the new year despite talks of potential recession looming and a higher for longer interest rate regime. Our next guest is sharing our 2024 wish list with us and hopes investors have a prosperous year for stocks. She joins us now, Megan Horneman, Verdence Capital Advisors Chief Investment Officer. And Megan, let's start with your take on the Fed. You hope investors see core inflation hit 2% next year. What are the chances you're going to see this happen and us?
Yeah, our wish list is exactly that for the next year. It's kind of a fun thing we do every year. It's a wish list. Some of these are highly unlikely. I think reaching that 2% inflation, yeah, we'd all love to see that. This would insinuate the perfect soft landing scenario that the Fed has been able to orchestrate. I find that highly unlikely, though. I think inflation is on a downward trajectory, but I think from here to get to 2% is going to be much more challenging for the Federal Reserve. I think that it's going to take some economic weakness in 2024 and even a recession in order for us to get there.
Megan, when this hit my inbox, I was so excited because you don't often get a 12 days of Christmas wish list amongst the Wall Street notes that we're reading through every day. Not that they're not all incredibly fascinating, but this was a much welcomed note. So thank you for this. I'm curious in terms of your outlook for the Fed. I know that you're wishing for no more rate hikes in 2024, but is there any chance that we are mispricing the potential for one more rate hike this year, or for the Fed to say, hey, 3% is not the new 2%.
Mm-hmm. Yeah, I do think that we are mispricing that. I think there's two things that are being mispriced. First of all, is the fact that they're going to be able to cut rates as aggressively as the markets are pricing in at this point in next year. I mean, there's forecasts between 100 and 150 basis points of rate cuts next year. We just don't see that likely. I think the Fed will give us that idea today when they speak. But I think the fact that they could be on hold for all of 2024, that could materialize. But I just don't think that the rate cuts are in the horizon that people are expecting.
We got to talk stocks now, specifically the Magnificent Seven. And I think next year you're hoping for maybe a more broad-based rally. We saw the concentration really heat up earlier in the year, and then we've had kind of a catch-up the last 6 weeks. But what's your take on what we can think about in terms of market breadth coming into the new year?
Yeah, so we had some fun with that. The seventh day of Christmas, we're hoping for it to spread beyond those 7 stocks. And still, I know there's been some movement and some bigger breadth in the market here most recently. But all that's being given the fact that the expectations for the Fed to cut. I think a lot of the rally in the Magnificent Seven and even this kind of melt up environment we've seen with this positive seasonal period is really that expectation that the Fed can cut rates. We're looking for a lot more volatility as we go into 2024. We'll be beyond this positive seasonal period. We'll also be in a situation where inflation, again, is stubborn. There are areas of inflation that we saw today, PPI come down at least on a flat basis month over month, but it's not really materializing in the CPI just yet. So we think that there's quite a bit of volatility. We think that once we get beyond the economic slowdown, when the Fed does start to look like they may cut rates, and I'm talking the possibility of very end of 2024 at the least, and I think more likely in 2025, that we can get a more breadth here in the market where we can see all market caps and even all styles start to participate in this rally.
All right, well, we also want to get your take on the housing market, specifically with the 30-year mortgage rate hitting a 23-year high this year. What are you hoping happens to that mortgage rate handle heading into 2024?
In my wish list, it would be great to see it come down to at least 6%. That would save an average home buyer about $300 a month. But I think that what we're going to see is the Fed's going to reiterate they're higher for longer. With the Fed on hold and our deficit problem that we have with funding the long end of the curve, this is something I think we could see. Treasury disruptions, the auction disruptions go into 2024 and see some volatility in that long end. So it's a wishful thinking we can get down to that point. I don't know that it's likely in 2024. I think it's going to take rate cuts to see that, to see some real relief there in the mortgage rate. So I think the housing is going to still have a rocky year next year.
Megan, we're not going to get to all 12, but we have time for one more. Your choice. What can we expect for blank?
Yeah, the budget deficit, that's my big wish. And that's obviously not going to happen. But at 6% of GDP, I'd love to see that get back to, the third day of Christmas to that 3% of GDP level, which is what we're typically accustomed to. The deficit spending is out of control. We saw that net interest costs now are exceeding the money that we spent on the defense budget. This is problematic. And I know it's going to be tough in a presidential year to get anything to change in this. But I think that we all have to understand that austerity is most likely on the way sooner than later.
Yeah, Megan, getting anything to change in a presidential election year is tough, particularly with the deficit. So best of luck on that wish and all of the others. Megan Horneman, Verdence Capital Advisors, Chief Investment Officer. We really appreciate it.